Okay, it's been a while. I think we're live and good to go. Let me know in the chat if you can hear me and see my screen, and then we'll talk. I'm still on my laptop away from desktop type of setup, so should be fine. Just let me know. Everything looks okay. Okay, good. Let's talk about the market. First things first, technical roundup brought to you by FTX, formerly Blockfolio, still the place to track and spot trade crypto. So be sure to check them out. You can still get the app without the leveraged products and structured products and all that type of fun stuff. So be sure to visit our partners. So what do we have here, right? We've got Bitcoin number go up a lot. We're going to talk about potential trades that I think are reasonable, the trades that have already played out or are playing out in the process, and stuff that is on my radar generally. So I hope this makes sense. I was supposed to do a Twitter Spaces today, but my guest couldn't make it, hence the live stream. And that also means I haven't prepared all my notes in hugely organized or chronological order. In fact, I've got no notes for this one, so we'll I think we're going to have to pretty much wing it. So let's get a fresh chart up. Permanent empty. Okay, right. So let's get our bearings, right? We've got the quarterly chart. Not a ton to say there, given how quickly the bull market progressed. Didn't have loads of structure formed. I will say it's useful in these circumstances to still get the quarterly open or the previous quarterly close, simply because that can show us where the bounce kind of originated from a support resistance perspective, right? To give us some high time frame anchoring. So you can have a quarterly level at 35K and not much else to be derived from this time frame. We could post up the 60K level, but really I don't think that's terribly useful, because if we get that close, I think the probability of finding resistance there is low, and the probability of making a new all-time high is very high. So I think to the downside, it makes sense to have that level. Upside, I don't really see this as resistance. Okay, and we're obviously above the quarterly open, which should come as no surprise. Where are we on the monthly time frame? Lo and behold, the quarterly level is interacting or lines up with that monthly lowest close as well. So we're just going to do quarterly / monthly, and we know there's confluence at 35K. And also, just by kind of eyeballing this chart, you can see if the market does start to look like shit, we have a last-ditch area in the mid-30s, because if that's not enough to make a higher low, we're kind of fucked and we'll probably trade towards lower levels. So it's good to have that in any case. Onto the weekly now. This is where things become interesting, right? Now, the context here is important. We had this entire consolidation range where we spent like 10, 11 weeks, and it has resolved bullishly. And that's really important. And also the way it resolved bullishly also bears significance, because you had a failed breakdown pattern, whereby you can see on this weekly price closed below the lowest close of the range, then got engulfed completely on that weekly, and that pretty much set the bottom, and it's been up only since then. And that up-only trade didn't just take us from the range bottom to the top of the range. It actually took us through the top of the range. And you can even see with a higher time frame wick that the range high also acted as support before this most recent leg up. Now that's really bullish, right? From a whatever price action perspective or whatever you want to call it, that kind of stuff shouldn't be taken lightly. If anything, it's kind of a reversal model that you should bear in mind, which kind of looks like this in terms of price structure. And this model plays out across all time frames, and it's pretty standard for a range trading reversal. So you've got a range high level of resistance, you've got a range low level of support. Actually, let's just give those a bit more space. This is the range high, resistance, whatever you want to call it, range low, support, whatever you want to call it. The most bullish outcome to this trading range, or this type of structure is pretty much what we've had on Bitcoin, right? Where price is trading within the consolidation, right? Then you have a failed breakdown, which gets bought up and trades back within the range. That's step one. And all the sellers or new shorts below the range low are either trapped, forced to buy back, or offside. Okay, and we know that shorts that are offside, being forced or choosing to close, become longs at market. And then not only do you have the range low reclaim, but you actually have a range high breakout and sometimes retest of support. And this second move is really important because A, it signifies a bullish break in market structure once you have that higher high formed. And B, it's not just a range low reclaim, you play it from one side to the next. It's actually a range low reclaim into a range high breakout, which is generally suggestive of trending conditions, right? The range looks to be done. You had one side really get trapped and then a breakout at the other side. These guys down here won't be feeling particularly good about that. So this type of model, again, comprised of two key components. I mean, 2.5 if you want to count differently. One is a breakdown that gets reclaimed, and two is a breakout, which causes a break in market structure. Once you see those two things together, you've got a really compelling case for a high time frame reversal. So bearing this kind of model in mind, we had a one-to-one equivalent form in Bitcoin dollar if we take our 10-week range, right? If these are its boundaries, we essentially had the same, whereby traded within here for 10 weeks, you got a failed breakdown, which got reclaimed. That's step one. And then step two was the breakout at the range high, and you even got a retest of it as support. And now the market's moved away quite decisively from that period of consolidation. So that looks good. Does that make sense so far in terms of context? Also, leave a like on the video if you like videos. Okay, cool. So that's where we're at. Now, in terms of, before we finish marking up this weekly chart, actually, we probably should do that first. Okay, so with that in mind, what weekly levels are we left with? So we know, obviously, we need the range boundaries there. We need the weekly range high. We need the weekly range low. And somewhat conveniently, that quarterly, monthly overlap at 35K is more or less at the midpoint of the weekly range. So if you want to take a really kind of macro perspective, maybe the upper 2/3 of this should be support or should act as support on any kind of pullback, and anything below that, things start to get dicey, because generally speaking, you do not want to see price sort of deviate or trade back within the range, because that's just evidence that the breakout wasn't accepted or there's enough selling to push it back into the range. And that's all stuff that we kind of don't want to see if we're bullish about the market, right? Okay, so these are our levels to work with in the 30s, but we're not in the 30s, we're in the mid 40s. So what do we have left? So I think there are two weekly levels. One is the nearest one at 45K, which is close to where the market is trading now. That's kind of the slightly older floor pre-breakdown. And then the one I kind of like more in terms of technical structure is the 49, 50K level. Not only does it have kind of round number significance, which we've seen be very important in crypto and in the past few months generally. 30K broke down and that was kind of the long trade. 40K break out. That was, the continuation trade. So literally using those round numbers in the appropriate context, and I think this is the appropriate context, makes sense. So, 45K, I do see it as important technical structure, but I think the better level is 49 to 50K. Both technically, because this was more recent support or the last support before the breakdown, but also it's got that round number goodness going for it. So those two things matter quite a bit, in my opinion. So in terms of the high time frame trades that were available or are available now, I think there are a few that are worth talking about, right? So one is the first time range low test. And by that, I mean, this is the trade that I very much heavily participated in, and it was buying this whole liquidation-driven nuke the first time it tested that bottom range at 32K, and obviously the wick below it sub 30. Now that trade has obviously played out, right? For me, at least participating in that trade, it was a case of buying support at 32K and selling resistance at 38K. That made sense. It was a good trade, and the setup is more than played out, right? What other setups have been or are available? And I'm only going to be like long biased for now because of the way this range resolves. We could do like a 1.1, which is the opposite of that, is range high failed breakout. And by that I mean quite literally this bit of trading that was done here, whereby we had a close above 38K, which was engulfed, and that took us to the range low. Less attractive trade. I just preferred getting involved in the nukes and the big liquidation driven moves. But we did consolidate between support and resistance for like whatever 10 weeks, 2 months. So you have to consider the buy support side or the sell resistance side on top of, as well as the buy support side, right? So that's fine. Now the more interesting ones. 2 is range low failed breakdown, and I think this is the trade that's playing out at the moment. And that was the one with this engulfing candle, and basically the idea that we had a weekly close below 32K that looked really bad, and then that essentially got fully retraced and rescued into this up only move. So all of these trades have kind of played out, and now the question is, and the trade that's currently playing out, right? Current is 40K range breakout. So one and 2 were the reasonable trades available between 30 and 40K. And, you were kind of spoiled for choice there, whether you want to buy support, sell resistance, etc., etc. But now that we're out of the range, I think it's important to kind of adjust your focus accordingly. And oops, that didn't do what I wanted it to do. Anyway, I think in terms of where should your attention be in the market now, I think forgetting about this range for the time being makes sense. And the focus is on the actual breakout and where it's taking us to. So that's kind of my map of the market. In terms of, again, my own participation, I smacked the shit out of the first one, didn't short 1.1. And 2, I did get a long signal, but, full transparency, whatever. I've been away from my desk on a bit of a break, spending time in another city with friends, family, etc. So I've just not been active for the last kind of 5-6 weeks. I don't want to do all the hindsight analysis, but the basic case, we wrote about it in Technical Roundup. The close below and then close above on the weekly is a good entry signal. And then as per Twitter, as well as the Technical Roundup newsletter, there was an additional later entry trigger on a reclaim of 40K. I'm pretty sure this was my personal one that was on Twitter, as well as the newsletter one, which basically suggested that this dotted line is the daily range high. And if the daily range high is going to align bullishly with the weekly breakout, you would expect a close back above resistance to send this market. And that worked really nicely. You've got to close above it, a nice little quick retest on the daily, no red candles, right? And then the move up. Even better in terms of time frame alignment, you're actually following the weekly close above the weekly level. You've got to pull back to the weekly level itself that was absolutely perfect on the daily time frame before a move up. So whether it was a case of positioning at weekly structure or taking the daily continuation trade after you had that weekly close acting as a tailwind, plenty of options for that to play out. And again, read Technical Roundup, read my Twitter, whatever, but that wasn't where I was. I simply wasn't at my desk, don't have access to my exchange stuff to take advantage of that. So where does that leave us now, right? The range is broken out. Bitcoin's at like almost in a straight line fashion, especially on the weekly time frame, headed towards 50K. What are some things to be aware of? So some broader perspective, and the final level I will add is probably going to be this weekly range high at 57, 60K. Just to be clear, I really think this is I might eat my words here, but while we're trading in the mid 40s, I don't see resistance. I'm not particularly compelled by resistance close to 60K. And again, it's the argument I made at the very beginning, which is that once you get so close to all-time highs, the probability of continuation is much higher than the probability for reversal. Or generally speaking, or to rephrase it, if you're going to get a lower high anywhere, it's unlikely to be this close to new all-time highs. Okay, that's kind of my perspective on things. Let me just get rid of this on the weekly time frame because we know it's a daily level. And there we go, the chart looks clean. Now, what do we do here, right? I think there are two distinct possibilities to be aware of, and I think I'm, quite split and don't have strong views quite yet. But ignoring either of them is how you get fucked. And what are those possibilities? One, mega bull case, smash 50 plus, right? That sounds pretty obvious, but if we kind of work backwards, it makes sense. If this is a complacency bounce or a macro lower high, a dead cat bounce, whatever you want to call it, you kind of need to work backwards and say, okay, if this is a dead cat bounce or a bearish market structure continuation pattern, where would you reasonably expect a lower high to come into the market? And I think the answer has to be like around 50K, right? And if it starts getting too close to 60K, then suddenly the case for some sort of lower high becomes really, really unpersuasive, because you've just smashed all the levels and left all these ESG China panic sellers behind. It just doesn't make sense. So accordingly, the mega bull case is that the best bearish setup, which is a lower high somewhere in the 50s, that fails. And as we know, if the best bearish setups fail, those tend to be bullish occurrences in the market. So mega bull case is, disbelief instead of complacency, and the market just tears through these levels. And at that point, given the proximity to all-time high, I doubt we'll see much de-risking, and if anything, probably a continuation and sort of panic buying in anticipation of this thing breaking out beyond. That's one distinct possibility to be aware of. As someone who didn't position on this breakdown and was away from the market, that's one that I'm very sensitive to in case I need to basically reposition or FOMO back in, for lack of a better term. So that's definitely on my radar as something not to get, not to ignore. So smash 50K plus, lower high thesis invalidated. Okay, very, I don't think this is the most likely thing, but it's definitely on my radar. Now, what's the second one? As you can imagine, this is the one people were sort of trained to see when the market was at 30K. A lot of people have forgotten that they were going to sell in the 40s, 50s, and kind of got swept up in how the market looks, which is very fair enough. We'll discuss some of those reasons. But still, this scenario you can essentially call macro lower high, weekly bear market structure continuation, roughly 50K res. Okay? And this is essentially the opposite of the continuation case. It's the basic idea that weekly market structure is bearish because you have essentially, this is your high, low, lower high, lower low, and then some sort of lower high swing to form here before continuation in the larger trend. That's the sort of macro lower high type of thesis that's worth being aware of, because if we're going to be very technical about it, macro weekly market structure hasn't caught up yet, obviously, and it's still bearish until proven otherwise. The daily is very much bullish market structure and turned that way, depending on how strict you want to be, certainly above 40. For me, bullish market structure above 35K. But, the weekly obviously going to be moving much, much slower than that. One thing I want to say about the macro lower high weekly bearish market structure continuation case is that if it does form, there's no requirement for the market to go to zero and start retesting, 20K levels, etc. It could very much well be the case that even the bearish setup plays out bullishly, as stupid as that sounds, and that would result in something like this, whereby the market does find resistance in this kind of 50K area. You do get a pullback, which starts to look really scary, and all the bears become confident once some red candles appear, as opposed to when there are green candles. But ultimately, the market finds support at this high time frame range breakout shelf under 40K, 38, 35, whatever you want to call it, and then you get your higher time frame trend continuation into this area, which is much less likely to act as resistance, and you get continuation, blah, blah, blah. So even if bears are right at 50K, I would be very cautious not to take that for granted, or at the very least not to interpret that to mean that they're right to the extent that 20K and all these crazy levels. They could still be right, but not as right as they think. So it's a question of degree, right? So, okay, if you're bearish at 50K, what's your target? If I get a setup there, my target is going to be 40K. It's not going to be 20K or 14K or 10K. and not until I get evidence, suggesting otherwise. So in terms of where the market is right now, this is kind of what I'm working with. The disbelief case is that the best candidate, I'm talking about case number 1 here, is that the best candidate for a lower high, which is in the 50s, in my opinion, finds no resistance. And the market just literally barts back up. And at that point, I would be far less inclined to expect resistance so close to new all-time highs. That's something to bear in mind. And then, of course, the complacency bounce argument is also very much on my radar. And I think the best area, as mentioned, for that to find some force is around 50K. It can certainly wick higher, but on a higher time frame structure point of view, that's the area where being on guard, or to use other cringe influencer terms, makes the most sense to me. But that comes with the caveat that given I'm mostly a level to level trader, if I manage to get setups to short in the 50s, my first trouble area is going to be in the 40s. I'm not taking for granted that, okay, this is the macro low high, and then it goes to zero. I don't know that. My system doesn't know that. All I can do in that case is wait for a setup to sell resistance and then close that setup at support. And if it goes further, I can try to get another setup or just miss the rest of the move, and I'm completely fine with that. So with these two scenarios in mind, it's like, well, okay, where's the market right now, and how do we integrate those into our analysis? Now, from a risk-reward point of view, I personally don't have setups to long a move like this. Why? Well, because the market's not at support, the market's at resistance, right? Doesn't mean it has to go down from these levels or whatever. I don't have that type of knowledge, but purely from a technical structure risk-reward point of view, we are much closer to resistance than we are to high time frame support. So I don't have a setup that allows me to buy into this simply because we are testing this structure from the underside and not from the top side. As I mentioned in also my Twitter thread, I was chatting to Jim Talbot in the thread, and he said, well, why aren't you shorting 45K if you've got that as a level? And there's a really good reason for it. It could still be resistance, right? If anything, the weekly close suggests that it closed below this level on a closing basis. This early week rally could end up being the wick before ultimately closing below 45K. That's completely possible. Just the way I trade, if I've got two levels which are kind of stacked on top of each other or in reasonable proximity to one another, historically, when I've tried to do business at the early level, I normally eat shit and get run over, and price will wick into or past the higher level and then give me the move I was looking for. So generally speaking, when I've got two structures from the underside that I want to trade or de-risk or whatever, take as a short in this example, if I do it early, it normally doesn't work well, and I usually get squeezed to the higher level before getting any sort of reaction. So when there's a stack, I do business at the extremes. In this case, the stack is between 45 and 49K. Accordingly, the extreme is 49K. So I'm happy to sit out at 45K, even though it's still resistance. And if it gets to 50K, that's where I may do business and transact, because the risk reward is better by virtue of that being the extreme of resistance rather than the beginning of resistance. Okay? Does that make sense so far? Is that like reasonably clear? Okay, seems to make sense. And again, the way I trade, when I trade with size or with conviction, I really want to kind of smack the market. I'll normally do so. Like, I do have shorter term strategies which I cater to, and those are fine. But the real kind of P&L makers when it comes to a quarter, a month, a quarter, a year, etc., is when I spot trade heavy at extremes. I did that at 30 to 38K. That was an awesome trade. And in order for me to take those sorts of high conviction positions in spot with like a lot of size, I pretty much wait for something which I can't miss. I want to do business at the extremes. I want the best levels. I'm really happy to wait for weeks or even months for those types of opportunities. And I've got no sense of FOMO or anything like that. I just want to see some really good stuff. And for me, the levels which are worthy of trading in that within that type of framework are around 50K with wicks potentially higher, and then if we pull back 38, kind of 35K at the absolute extreme. If the market's where it is right now, it's not at a resistance that I want to sell, but it's not an area that I can buy from the underside either. So I'm completely happy to chill in that regard and wait for one of those two scenarios to form, or for something else to form, which becomes super clear as time progresses. So one very positive thing to note about this rally is that it's pretty much spot driven or driven by non-gamblers. And the kind of quantitative evidence for that is the fact that the market's ripped up from whatever sub 30K to 45K, and futures premia and funding are like still mostly flat. And if you compare what the futures curve looked like and funding rates and the basis, etc., all of that kind of stuff when we were trading the same price level on the way up, it's virtually incomparable to what it is now. And, if you want to look at the block and look at exchange volumes and all these, Coinbase kind of app ranking and, followers, web traffic to Binance and new users signing up, etc., all the reasonable metrics for retail participation are still pretty fucking low, right? This isn't like gamblers driving the price up via derivatives who will then get easily liquidated and cause a cascade on like a 5% move down. This is, hate the term, but smarter money, it seems, are participating in this bid, and retail still kind of just got wiped out and hasn't recovered from the nuke. So that's healthy. And again, the reason it's healthy is because the base assumption you're making is that this is a spot-driven rally, less likely to be privy or subject to liquidation cascades, and kind of just less fragile on the downside, right? That's sort of the base case of what people mean when they say a spot-driven rally is better. Now, again, that could change pretty quickly, right? Let's say the next weekly candle kind of rips us into the 50s and Bybit funding goes sky high and all the other stuff, suggesting really, real aggression in the futures market. If that picks up, then that would set up a really nice confluence for some sort of lower high pullback at 50K. But for the time being, this rally is what, quote unquote, healthy as far as these things go. So that's very much a data point that shouldn't be taken lightly. I think those are most of my thoughts when it comes to Bitcoin. So if I had to summarize, it would be something like this. One, healthy rally, prims are low, derivs flat dead, retail dead, stronger hands in charge. 2.1, market structure more akin to early bull run, spot prems, retail nowhere to be seen. Point number 3, lots of sidelined cash, China plus ESG sellers awaiting re-entry. Kind of speculative, but I think that argument is probably correct, and I find it persuasive at the very least. Now, in terms of shit to do, round numbers working a charm. 30 bought, 40 breakout, 50 res. Most likely to get screwed by 1, complacency into res around 50K. 2, disbelief upon acceptance through 50s because probability of finding res lower high very low. 5.1, even if market finds res at 50K handle, lower high. FTA, first trouble area, is still range breakout around 40k. Only if 40k fails back within the range, we can reasonably contemplate shitting ourselves. Stuff to look out for: funding, futures prems at high time frame resistance, GBTC premium discount. What else is interesting? Whether dogshit altcoins take the lead. Bad. Let me make this slightly smaller. Okay, so yeah, point number one, healthy rally, because the derivatives market at similar pricing to where we were, a few months ago, just looks a lot healthier, because it's not, the longs which took us up here were primarily spot and spot margin. If they weren't, then we would see that in futures premium or funding rate on perpetual swaps, etc. That just doesn't seem to be the case. And because it's cash buyers or generally lower leverage / better collateralized buyers, the chances that their positions are fragile are lower. So they're not as likely to cause some sort of liquidation cascade on a 5% move down. They have stronger hands, etc., etc. Point number two, which relates to point number one, retail is dead, and yeah, stronger hands in charge. We can see that via your standard web traffic and just generally. You can, looking at BSC, Polygon, all the retail indicators that we were used to, and general stuff I look at when it comes to who's participating in this rally. Because the derivatives market is flat and Binance, Google searches, signups, all those other things where retail goes to trade, all of that is still shitty. Exchange volumes being a big one, all of that is still, flawed, which supports the thesis that it's a different type of buyer on this rally, which is good. 2.1, market structure more akin to early bull run for that reason. Yeah, spot premiums, retail nowhere to be seen. I made the same point in like 3 points, my bad. Point number 3 is important. Lots of sidelined cash and China ESG sellers awaiting re-entry. There's a lot of, again, that's the reason this squeeze played out so spectacularly, as mentioned, is because funding was negative, but for once, price was moving against funding. And as price was moving against funding, funding kept going lower, which suggests disbelief or additional shorts against this movement of price. I've got a Twitter post-it note about funding, and it's important to note that negative funding isn't itself a catalyst for price to go up. Negative funding could just mean that derivatives are bearish. But if price is going down, then the aggressive positioning in derivatives is being rewarded. What you want to see is a divergence between the two. So aggressive position in derivatives, but price not following through or even moving against them. That's how you set up a squeeze. And the same works the other way around, right? And it happened when we were up here, especially around the Coinbase IPO kind of follow through and into the Coinbase IPO or direct listing, whatever. Derivatives were really bullish and premiums were high, but price wasn't moving. And so that was actually moving down. And that exerts a lot of pressure on those longs because staying long is expensive. And if they start losing their trade, that's how you get a liquidation cascade. They become less collateralized for those positions. They become forced sellers and so on and so forth. So it's kind of the opposite of that we had on the 30K breakdown, which is significant. Round numbers are working a charm. I take this point really seriously. Sub 30K buyers, 40K breakout buyers, and kind of expecting 50K to be the first real sticking point. 45K is still resistance, but like a wick to 50K, I think is definitely a reasonable scenario to contemplate. Point number 5, the two scenarios which I think will really screw how you play this bit of the cycle. Number 1 is being super complacent at 50K. And, I can be criticized for the following statement on the grounds of it being P&L trading, but I still think it's important. If you took zero profit on anything when the market was up here, and you round tripped a 55% nuke, and even lower if you were holding Ethereum, altcoins, whatever, and now you're watching the market come back to 50K and you still do nothing, I just don't think that's a reasonable way of acting. I was lucky into how I played like this whole rotational cycle, so I'm not forced to confront those choices. But being real for a second, if you did nothing at 60K, nothing at 50K, 40K, and you just round tripped your entire journey and ate that massive drawdown and have kind of gained so much of it back into high time frame resistance, it kind of makes sense as an area to manage your positioning or exposure. Even if it rips to new all-time highs or to 60K from there, I still think it's plus EV to be better this time around rather than on the way down or kind of the first time we traded these prices. So I think that's point number one, being complacent into the 50K plus type of area. The cost of being wrong there is really shitty. So I think it's, pay attention or whatever other influencer language I can use. And the second scenario, which may fuck you, is disbelief if 50K just gets smacked and there's no area or no compelling area for a lower high. If you just kind of stay sidelined there or expect macro bearish continuation when most of the levels have been blasted, that's going to be a tough pill to swallow, right? And I really do think, and again, this is subject to change because the market changes as well. If there's no lower high in the 50Ks, then the chances of a lower high are super, super low. Legit kind of bear market cancelled type of territory. So being in disbelief there also incurs a steep cost, in my opinion. With the lower high scenario, though, point number 5.1, even if the market finds resistance therein, I still think, at least for me, even on a high time frame basis, level to level trader, if you do manage to reduce exposure or whatever, get short at 50K, I would not take 38 to 40K breaking for granted, not at all. Especially if you're one of those, big funds or participants who kind of sold the China plus ESG type of narrative. I would expect if the market starts to pull back, this would be a very attractive re-entry point for those participants who missed out on this rally. And now that the fundamental picture looks better than it definitely did, I could see bids chasing in that type of area to regain that exposure that was lost at those uncomfortable prices. Now, yeah, it could be the case, max bear is that you get some sort of lower high and then the market just goes to fucking zero, but I wouldn't take that for granted. I'd still reassess, reposition, or trade manage at around the 40K handle. I think that's important. And again, this sort of mentioned this in passing. If 40K fails, we fall back within the range, that would just look like shit. It would suck. I think the lower high thesis really starts to gain steam there, and I definitely wouldn't want to be long into that. I think for any type of technicals and whatever, if this breakout doesn't stick, and if resistance at 50K does a better job than support at 40K, that's some bear market price action. So that would be shitty, and I would take that signal very seriously. And yeah, stuff to look out for, at least stuff on my radar. Funding and futures, premium, and all that kind of stuff we're used to looking at when it comes to derivatives data at high time frame resistance. For me is, 45K, yes, but 50K would be that kind of high conviction area to look for signals in derivatives data. GBTC for institutional risk appetite still makes sense, especially if it becomes an ETF. That could be quite a spicy catalyst. And then also where risk flows as the market goes up. If Bitcoin hits 50K or goes through 50K and in an area of high time frame resistance, and I see altcoins start to outperform and just dog shit starts to moon, that could also be a signal to de-risk, rotate a little bit, and expect a washout for those newly positioned participants who choose to buy crap. Yeah, that's kind of all I've got. Does that make sense to anyone? Is that helpful? Any questions? We're almost at 200 likes. If we cross that, that'd be super cool. Thoughts on DeFi? It's kind of underperforming everything right now, so I'm not sure. The majors just have better catalysts, and that's where the attention is. Maybe there's a rotation play there somewhere. You'll probably have to talk to Ledger Status about that one. But for now, looking at DeFi against ETH, and yeah, it's not quite there for me yet. ETH, yeah, ETH is sort of. But if anyone wants to screenshot this for whatever reason, I mean, it's kind of crappy, but some people like it. I'm gonna take it off in 3. Okay. Oh, let's not do that. Let's just do this. When it comes to ETH, I think it's pretty similar. You know, it doesn't have that kind of weekly overhang structure, which isn't as clear. Like on the weekly time frame, this literally looks like it could go to all-time highs right now. I will say there is a level that I wouldn't ignore, and ETH's lower high type of candidate area for me is, as in, you know, where the risk reward for longs is about as shitty as it's going to get, is essentially the breakdown floor at 32 to whatever 3,500. That's really the area where hold on, and there's also the previous range high breakout here as your nearest support. But you know, if there's any type of risk off or lower high thesis that's going to play out, or if the market is just going to find resistance at any point, I really think the 3,300-ish area is the most logical place for that. So I guess the short-term range for ETH that I've got is resistance around 33, 3,400, and support at the previous range breakout at 2,700. So it looks something like that. If the market starts to look really shitty or really bearish, it would either take the form of outrightly finding resistance at that level and starting to nuke, or two other scenarios: a breakout above it which fails to get accepted, that would look shitty, and that's probably your macro lower high right there. Or alternatively, if you want to wait for more evidence, price trading back below the macro, well, just the range high breakout at 2,700, that would also look shitty. So I guess the max shitty scenario would be the market finding some form of resistance, either post failed breakout or not, at 3,400, and then falling back within the range. That would be really shitty, just worth having on your radar. But in terms of levels, you know, I don't have a bias coming into this by any means. I think if ETH hits 3,400 and Bitcoin hits whatever 50K at the same time, I would find it really difficult to criticize anyone for de-risking there, or at least taking some profit or moving their stops up or managing their trade. I think that just makes a lot of sense and is plus EV, generally speaking. You know, if I had to take that trade 100 times, I think overall you'd come out positive with both Bitcoin and ETH hitting high time frame resistance. Doesn't mean you have to short the shit out of it, but you know, if you get to ride these moves and the same one on Bitcoin into weekly and daily structure, I think if there's anywhere where you're going to manage the trade or rotate or claw back some of your portfolio, if you ate all of this and have watched it come back here, I really think that's the area to do so. And obviously, you know, this shit evolves and changes. Like if the market breaks out here and starts to pull back, you can say, well, look, I've got a new invalidation. This is now support. And if it closes below it, I will close my longs. But otherwise, I'm expecting continuation from that level towards the all-time highs. So, you know, these things change and they can evolve pretty quickly. But in terms of high time frame structure, I generally think it really makes sense to trade manage around 3,500-ish. And again, this shit can wick, right? So 35, 3,600, whatever, this type of area for ETH, 50K for Bitcoin. If you did nothing on the way down, or if you got really good long exposure at the lows, I really think from a high time frame point of view, we're starting to reach the first areas where it's plus EV to take some profit or manage the trade or do whatever you do to put yourself in a position of strength rather than be a slave to market movements. But yeah, short-term TA stuff, this is the ETH range. 2,700 breakout, 34, 30, 33 to 3,500 resistance. Does that make sense? Are you optimistic about this rally because it's led by Bitcoin, especially in the last few days? Yeah, that's certainly a good sign, as well as no crazy funding rates or futures premium coming into the market for now. All very positive. But, you know, purely from a structural, technical trading, TA, bullshitty stuff, I don't have long setups into these levels from the underside. So I can, all I can do for the time being is cheerlead. I don't really think Bitfinex has the... I'm not following or monitoring Bitfinex longs and shorts at this point. I don't think I'm not looking at bearish divergence on volume either. It's not something I follow. Yeah, so that's kind of all I've got. That's the market for me. Again, I haven't participated in this rip. I got the April, when was this? No, the May dump from 30 to basically 40. Played that the first time round. That trade was good. The 40 to 50 trade, I wasn't on board for that one. Chose a weird time to prioritize real life, but no regrets. Um, and I'm happy to wait for the next setup where I feel high conviction enough to smack something. But if these videos are always replayable, so you can kind of go back and read that little checklist thing that I had in terms of levels that make sense and setups that make sense as well. And yeah, stay nimble. Stay nimble. Don't take anything for granted. Um, Especially if you got wrecked on the way down, it's easy to shift your bias to be like, okay, now I'm going to make it all back and then some. But the market doesn't owe you that. So best you can do is to do plus EV stuff. And for me personally, as in my view on the market, is that if Bitcoin rips into 50 and ETH rips into mid 3000s, and you've clawed back or even made back, given your longs from the bottom, whatever, a significant amount of the shit you ate from the nuke, I think those areas is a good call. And even if it rips through those areas and goes higher, trade managing in those areas is still a good call. Because there'll always be a million setups or many high time frame setups in this market. So ignoring them is, not how I like to do things, at least. Okay, that's kind of all I've got for this week. I don't really have a view on the NFTs. It's just not my area of expertise. I've got Yats because they were really fun to mint, but I don't have any JPEGs or anything like that. I think it's fun. I think it's cool. It's kind of bubbly because, and I say that not just as someone who's sidelined and doesn't own penguins or other animals. I say that because just like DeFi, there was a true value proposition there, but it went through its own mini market cycles when vaporware kind of copy pasted zero innovation projects started really gaining market share. And I think we're approaching something similar with NFTs, but always with these bubbles where you're sidelined, that they can always go 10 times higher before your thesis for a correction plays out. So no strong views from me on the NFT stuff. I'm not, that's just not me. I don't know shit. We did have G Money come on the Technical Roundup podcast to talk about NFTs. So if you're a trader and you have no idea what's going on, what is this mint, JPEG, CryptoPunk, whatever, go listen to that episode and you will be enlightened. But unfortunately, I'm not, I don't have any commentary to provide you with when it comes to what rocks to mint or what to do in that regard. So no NFT commentary from me. I'm very much Bitcoin and ETH focused, especially as they approach these high time frame decision points. I really want to nail the next high time frame trade, and that's where my focus is. So apologies for that. In terms of funding rates and futures premium stuff, the one I go to eyeball stuff quickly is BYBT funding rate, and I think ViewBase is also another one. Where is it? Do I have it here? I don't think I've got it here. Yeah, ViewBase or BYBT, you can go there to see the actual funding rates. You can also go to Coinalyze to get a sense of historical and aggregated funding rates if you want. And I'm sure Glassnode and other places do them as well. I think you can also see the basis, can't you? I think on the block you can see the historical basis. Hold on. Futures. Take your time. Yeah, you can see OI, you can see funding rates kind of historically, and this some people say when they're still like flat relative to everything. Short and long legs, and there you go, annualized daily basis like on Binance and other exchanges as well. Aggregated OI, etc., etc. All of this is free. This is the block crypto. BYBT for like actual funding rates, including predicted rates. Coinalyze if you want aggregated stuff, including open interest and that data visualized differently. Okay, cool. I'm going to stop babbling. I think I've said everything that is somewhat useful or could be useful to someone somewhere. That's all from me for the time being. If something really spicy happens, I'll be sure to update. But just replay the video, and I've got all the stuff I'm looking for Signal summarized in those few points, and kind of discuss market structure. For those who just joined, the summary version is that this rally overall looks healthy. As someone who still anchors trades on TA stuff, I don't have a long setup right now, simply because I think 45 to 50k is high time frame resistance, with 38 to 40k being high time frame support. And quite simply, we are closer to resistance than we are support. And the probability of some sort of lower high, even if it results in a shallow pullback, or even if it's a macro pullback, we will get fucked over. If it's going to happen anywhere, we're approaching those areas where it's most likely to happen. Even if it's a bullish pullback or just like a bullish retest throwback, I think around the 50k handle and mid 3k for ETH, those are the prime candidates for shaky longs in the market to eat shit. So I personally, until the weekly chart looks slightly different, either blasting through those levels that I mentioned or pulling back to prior structure. Until that shifts, I can't really cram longs from the underside as healthy as this market looks. As always, everything is subject to change. Maybe I see something completely cracked out, like a bearish setup of 50k failing, and I get long, whatever. I can't account for all variables, but generally speaking, that's where the structural stuff is at for me. And again, if any of those big changes or setups happen, I'll try to keep you updated. Technical Roundup has done an amazing job in catching a lot of this move. Initially became bearish when this breakdown happened, immediately flipped bullish / got invalidated on this weekly close, and then an additional long signal at 38 to 40k on the reclaim basically this week here. So newsletter's been on point. Go to trletter.com, read it once a week. It's free, it's good. Donald and I just kind of bash our heads together and come up with a reasonable system. Otherwise, I'll still mostly be hosting Twitter Spaces on Mondays. But if I see something really good, I'll either do one of these again or tweet about it. That's all from me. Thank you again to FTX, formerly Blockfolio, for partnering with us on this content. To support us, please subscribe to the channel. We're almost at 30k. Like the video and do all that good stuff. Trade safely, stay sharp, and don't do anything stupid. I will see you soon. Bye-bye.